Well, he testified. It was on C-SPAN for the CFTC. He had about 5 minutes, so he read the information very, very quickly so we get into the record. And he's Bill Murphy, chairman and director of GATA Gold Antitrust Action Committee. We've had him on over the years several times, and other members of GATA. And so there have been some huge new developments that have even ended up in a few mainstream newspapers in the last 2 weeks. Whistleblowers in the U.S. and England and others coming out with JPMorgan Chase and others fixing gold and silver market. Now, we've known this has gone on for a while, but now we're getting specifics. And they've been harassed. They've had a lot of problems since they've been exposing this. We'll talk about that. But this is a big deal because we've got the manipulation and the fact that Goldman Sachs and others were telling people to invest in derivatives while they were planning to implode them by design. They've now been indicted for that. You've got more and more coming out. But one of the biggest scams is the suppression of the gold and silver market and a kind of a reverse carry trade that they've been using there. And so even if you don't like silver and gold or aren't into real assets, this deals with the overall fraud and is really a central issue. And so he'll be with us for about the next 40 minutes or so, and he won't have to hurry through his information. So, Mr. Murphy, thanks for coming on with us. You've got the floor.
Great to be here, Alex. One thing that I know that some of your listeners may not care about gold and silver, but they certainly care about the economy and the financial markets. And January 31st, 2008, GATA placed a $264,000 full-page color ad in the Wall Street Journal, which was a couple of months before everything fell apart. In that ad, we talked about catastrophe and disaster coming because of the directly from the suppression of the price of gold. And it has to do with the relationship between gold and interest rates. And had they let the price of gold trade freely, it would have been much, much higher, would have been more a warning sign. The thermometer would have been off. There wouldn't have been maybe such risk-taking. But interest rates wouldn't have been so low as they were for so long. And so it directly affected every one of your listeners because they've artificially kept the price of gold way below where it should be. If gold had kept pace with inflation, it would be $2,300 an ounce. And even trading with platinum, another precious metal, used to trade before the suppression scheme about the same price. Platinum, I think, is $1,730 today, and gold is something like $1,140.
Absolutely. The suppression of gold and silver is key to their entire derivatives fraud and allowed them to do what they've done now. They're now calling for world government, financial taxes, VAT on all banks and institutions, paid to the elite banks. They're involved in an all-or-nothing takeover right now, and this information could bring them down, and you're starting to get some major traction. Break down how it works and the latest information.
Well, the Gold Antitrust Action Committee was formed in January 1999 by my colleague Chris Powell and myself, Chris, editor of a daily newspaper, and to expose the manipulation of the gold price by a bunch of bullion banks like Goldman Sachs, JPMorgan Chase, and then we realized that the government was involved with it also, the Fed and the Treasury. And we've been on this 11 years, and we finally got a little daylight. I was on, somehow I got on CNBC 11 years ago, Ron and Sana, and that was the last time the American public heard from me in the mainstream. We've been banned ever since. And we got a break with this Commodity Futures Trading Commission, where there's a great commissioner there named Bart Shilton. It was like Elliot Ness, and he's really trying to do the right thing. And he got me on the docket to make a presentation in front of the CFTC, and that was on television. Of course, the only thing that the TV feed that went down was when I was speaking. Then as soon as I was done, the feed gets back on. It's very interesting because what most people don't know, Chairman Gensler, when it started, said, "We're not going to get into specific allegations. We don't want to go there." And Bart Shilton got livid. He went red in the face. He said, "Are we going to have censorship?" And Chairman Gensler backed down, and then the TV feed went off. But in that presentation, I talked about how there's concentration of positions by JPMorgan Chase and HSBC and other big banks are ridiculous, and they're way more than any other in any other commodity market in terms of this concentration issue. And we then went on to explain, what the manipulation was all about and so on. So it was quite a show because it was a whistleblower who showed up, and they wouldn't let him speak. He thought he was going to, named Andrew McGuire.
Well, let's stop right there, Mr. Murphy, because I want to go over that and take your time on this. but it seemed to backfire that they cut the TV feed when you were testifying because it was recorded. It did end up getting out on the web. And so, I mean, that really highlighted what you were saying for people. And then that they wouldn't let the whistleblower speak. I mean, there's a serious cover-up here. Go ahead.
Yeah, well, there is. And what happened was this whistleblower, Andrew McGuire, got a hold of one of our directors, Adrian Douglas, and we wrote up what Andrew McGuire had to say. And basically, he told the CFTC by emails 3 and 4 or 5 months in advance what JPMorgan was going to do ahead of time. He says, here's what they're going to do and when. And it happened. And we had these emails, and I read how JPMorgan, that their traders were laughing at the public and ripping them off, that they're making all this money, and the public is a bunch of dopes because they get suckered all the time by these people that are acting in a collusive action. And so the email showed up, with the CFTC, and afterwards I was able to present the press with these emails and so on. And then the next day, Andrew McGuire and his wife were hit by a car outside of London. It was a wild story where he was hit, and then the guy tried to get away and hit 2 more cars, and there was a helicopter chase, and you can't get much wilder than this.
Did they catch the guy?
Yeah, but we haven't heard a thing about it since. Dead silence. But they caught him. Well, I don't know what's happened.
This is amazing. Again, this is really at the foundation. It's like one of the bottom cards in a giant tower of cards that are about to topple. Their manipulation of precious metals. Please continue.
Well, we're one of our major issues, especially if we're concerned about what gold and silver is really where. One of the people who was actually a critic of ours said we were too conservative. That basically there's the amount of gold and silver traded in a day is 100 to 1 compared to what they actually have there in London in their vaults in gold and silver. And we believe at some point, just like what happened with Madoff and some of these other scandals, should a lot of people all want to go get their gold and silver at the same time, you could end up having a default. And it's going to get quite wild, I believe, in the months ahead. And the major thing is that we've now, because of the CFTC appearance, according to the mainstream, it seems bizarre to me, but I guess that gives us credibility. So now there's a great deal more interest in what we have to say, and it's spreading all over the world.
Now, in layman's terms, explain to people why the system wants to suppress gold and silver and how they do it.
Well, they do it 2 ways. One with physical gold, which they have to put in the marketplace. They take gold surreptitiously from central banks and feed it into the system, and then they use it with derivatives on the COMEX and other financial markets, and they play with the price in the paper market. And the banks make money by flushing the specs out over the past, even though we've been in a 10-year bull market, they do it all the time, pick up $30, $40, $50 at a pop. And for the U.S. government, think about it. What happens every time the price of gold goes nuts? People say, what? It's too much inflation? Crisis? Bad for the dollar? It's bad for Wall Street. It's bad for the politicians. It's bad for business. A rising gold price is whether right or wrong, suggests that something's wrong. At least that's what because it reveals the worthless fiat nature of the hyperinflated derivative scam. That's correct. And I know that's also what it does. In other words, with printing all this money and so on, if the gold price were to rally $100 tomorrow, everyone would be jumping up and down about just what you're talking about. But because they keep knocking it down, there's very little conversation. It's kind of just subdued.
Continue.
So I think it's going to get very exciting when it's ironic that Gada is very well known in Russia, but hardly known at all in the United States because we have no free press here. And we had a conference in August of 2005, which one of President Putin's top economic advisors, Andrei Bykov, came. Price of gold was $436, and it wasn't going anywhere. Said it was the best conference he was ever at. And 2 days later, the gold price exploded and rallied $300 in the next 9 months. And at that conference, I said, and it was my opinion, that I said it was $436, then the price of gold is going to go to $3,000 to $5,000 an ounce, and that's what will be needed to clear the market. So we have a long way to go for any of your listeners that are interested in what I believe is a great investment, even though we've been up 10 years in a row now.
And clearly, though, they're losing control because it's gone from $300 to $1,145 where we stand today. So if you look at the graph, they're able to push the beach ball underwater, but then over time it continues to only go up. They can't hold it down.
Well, that's a good point. And what we call it is it's a managed retreat. What they do is they never allow too much excitement to ever enter the market. For example, 7 times this year gold has gone up exactly 2%. It's what's called a 2% rule. They don't allow it to go up more than that. They work over the shares. For example, one of the big funds years ago, Oppenheimer, lent its shares to JPMorgan, one of the kings of the gold cartel, to work over the share market. So they never allow too much excitement to enter the picture. So gradually, it's like a stealth bull market. There was an article the other day that said 93% of investors believe gold's going to go down from here. If that isn't bullish, I don't know what is.